Hi students, welcome to Radha Krishna Edutech. Today we will discuss about a subject called cost accounting in that cash flow system. In that we will be discussing two new topics like net profit from operation and cash from operation. Usually in textbook you will be come across that you have to calculate the cash flow statement by three ways like cash from operations and cash from financing activities and cash from investment activities. Before calculating that, we have to calculate a net profit from operation because for example, net profit, you think I have some 3 lakh rupees net profit for the year 2022-23, but this net profit will include non-cash item. Then profit from non-operation or loss from non-operation item. So we have to remove all these items, then we have to arrive a net profit from operation. Because if you are considering these non-cash items or non-operation items, then the net profit for cash flow statement is not correct. Okay, so today I'll be explaining the topic on English as well as Kannada both. So both the students can understand properly. Okay. So I will explain based on the sum which I have written down. The sum links will be given on the video itself or it will be displayed on the first minutes of the video itself. Okay, in the first minute of video itself the sum will be displayed. You can copy over there. The first thing we'll calculate on calculation of net profit from operation. Okay, so we will do two items. So net profit during the year. So I have a profit for 2022 and 23 is 3,50,000. Okay, this is my profit. But this profit is non-adjusted profit. Mean to say there is a non-cash items as well as non-operation items. I mean to say non-cash item. What are the non-cash items? For example, in a P&L you will have a non-cash item like. Actually, there is no cash involved in this. For example, depreciation, amortization of goodwill, and you mean to say transfer to general reserve, then you mean to say redemption reserve, debenture redemption reserve, then these are non-cash items. Okay, this comes under non-cash item. Now non-operation item. So I mean to say non-operation item means, for example, now you have invested in some of the for example, you have invested in gold, you think gold or land. For 2 lakh you have invested, for example, for 3 years you have invested. End of this 3 years you would have sold this investment and you would have got some 2,20,000, you think. So out of this 20,000 is your profit. But this 20,000 is not related to your operation. For example, I am doing a business of selling of a marker pen. So but this 20,000 is not earned by selling a marker pen, but it has been earned by investing. Okay, so this will not be considered as a non profit from my operation. So this item has, if your profit is, if you incurred a profit, you have to reduce your profit value in net profit, because if you have earned 1 lakh during the year plus 20,000 means what will happen? 1,20,000 you would have shown the net profit, right? But this 20,000 is not related to your operation, so you have to reduce this value. So your actual net profit is 1 lakh only. In the case if you have if you have loss on this investment, you think you have got a you have earned some loss of 50,000 rupees. So in that case, what you would have done? So you would have done is in that case, what you would have done is 50,000 you would have reduced from your actual profit, right? So your actual you would have shown this is my net profit. This is wrong, because we should not, this is not a wrong in the sense of during the net P&L statement, but while calculating this cash flow statement, we should not consider this non-proportion item. So we should add back, again we should add back plus the item. So your net profit will be 1 lakh only during the period. Okay, understood, right? This is how the non-operation items comes in. So same way. Now same thing, non-cash item. For example, depreciation. Does you involve any cash in depreciation? No. For example, if you have purchased an asset, what is your first entry will be? FA computer, debit 1000. For example, 10,000 you would have purchased. This is debit. This is credit. Okay. Then what you would have done is I am for a supplier for A you would have paid 10,000. This is entire for the year. Now for the year you think you have purchased this value on April 1st itself. April 1st 2022 you have purchased. For entire year 10% depreciation means 10,000 into 10% is $1,000, 1,000 rupees, right? So your entry will be depreciation is 1,000 to computer 1,000. So this 1,000 will come here as in net in P&L item. This 1,000 will be reduced minus 1,000. So in fixed asset you will show as a 9,000, right? This is how your balance sheet looks like. This is my FA. This is my depreciation. This is my this is how my balance sheet looks like. And this is my journal entry. This 1,000 will flow to my P&L statement. But there is anything is cash involved in this? Nothing, right? But there is a, now I purchase a computer for 10,000. I purchased from this guy A, and but I am paying on 10,000 is later. 10,000 I will be paying to him later part. That will come under investment activity. But this is not a, now we are doing only the calculation for profit from operation activity. So in that case we will not take anything. Any of this 10,000 will not be a cash outflow. Okay, you got it right. So during my year, so depreciation is how much I have? I will have my 5,000 for entire year. Amortization of goodwill. Amortization of goodwill, how much I would have posted? Some 3,000 I would have taken, you think. Then transfer of general reserve, 11,000 I had taken. Debenture reserve fund, I have moved it to debenture reserve fund. So this is 5,000 I have taken. So total of this is how much? 5, 5, 10, 21, 24,000 you have this value. So this 24,000 is during this net profit is there, right? This net profit is after deducting this 24,000 you are getting 3,50,000 in your net P&L statement. Now you have to add back this, because this is a non-cash item, which should be a non-cash item, and there is no any cash is not involved in these items, so you have to add back. So 3 lakh 50 plus 24,000 is 3 lakh 74,000. Okay. Next, non-operation item. Non-operation item in the sense what you will have a non-operation. So for example, now you have profit on sale of fixed assets. So how you will calculate this fixed assets profit on sale and all, I will show in next videos. This is a basic example of how we will calculate a cash from operation by adjusting the net profit from operation. This is the first step to calculate a cash from operation. So okay, calculation net profit from operation we are doing. So 24,000, 3 lakhs, we are adding back 3 lakh 74,000. So next item is profit from fixed asset. So while selling my fixed asset, I have earned a profit of 10,000, you think. So what will happen? This net profit is there, right? This profit you would have added here, right? 3 lakh 40. The cash, this is the income. So you would have added in your net profit, right? This is an operation from, this is not an operation item. This profit is not a profit from operation. So you will add, you will reduce this value. So I will reduce this value. So if I reduce 3,64,000, I will get. Okay. So next, you will tell loss on investment. So I made some investment. For example, every month I would have I would have given 1,000 into 12 months gold I would have invested. So 12,000. But when I sold this 12,000, I would have got only 10,000 because of market rate fluctuation. So there is a 2,000 loss for me. So this is a loss, right? During loss, what you would have done in net profit, you would have reduced it. So you have to add back it. So add back. So you have to add this value here. So 2,000. So 3 lakh 66,000. So now this 3 lakh 66,000 is there, right? This is your cash from, net profit operation. So your 3,66,000 is your net profit from your operation. Got it? So basic thing, in your this would have been asked in your examination. How they will ask is, this is your net profit during the year. They would have given 3,50,000. Then they will give all your adjustments. They would have given you P&L statement itself. In that P&L statement, you have to check which and all will come as a non-cash item, which will be a non-profit item. If you have added it, you have to reduce it. If you have reduced it, you have to add it. Okay. For example, depreciation, you would have reduced it. For example, now your net profit will be 3,55,000, but 5,000 depreciation is in. So amount. So this is my depreciation. So my net profit is 3,50,000, right? You would have reduced this 5,000. Now this is not, and this is a non-cash item, right? So I'm again adding back 5,000. So my profit is 3,55,000. That's how it is. So all these four items has been reduced in your profit. So we are adding back, and this profit from sale is added in your net profit, So we are reducing it. Same way, this loss of investment would have been reduced from your net profit. So we are adding it back. Same. This is a net profit from operation. So after calculating this net profit from operation, you have to calculate a cash from operation. I have one small two basic examples I will include, and I will finish it off. Okay. For example, so I will use here. I'll reduce here so you will understand. Okay. net profit. So I have creditors 2022-23. Creditors I have 10,000. Ending value I have 15,000. Debitors I have some 16,000. Opening balance I have 10,000. Okay, this is the thing. Now what is happening here? This is a current asset. Okay, both are current asset. So cash from operation, you have to take only the current asset values, not a FA related time. Whatever you are considering as a current asset, that after calculating net from operation, you have to go to calculate the whether there is an increase or decrease in cash based on your current asset. Okay, I am taking two new examples, or else I can take one more also. Outstanding expense. Outstanding expense may be your salary or small vendors, anything could be. So your opening balances are having 5,000. Here I have 8,000. Okay, this is a payable form. So what is happening here is creditor 10,000 and 15,000 you think. So what happened here? There is an increase in creditors. Increase in creditors means increase in cash, correct? So for example, I am purchasing some item. For example, I purchased for example, I purchased some service Airtel. So I have this 5,000 with me. Expense, tele expense 5,000 and Airtel from this vendor I am thinking. Right. So when there is an increase in creditors, there is an increase in cash. So cash has increased by 5,000. Now debtors 16,000, 10,000, right? So decrease in debtors, increase in cash. 6,000. How I will tell you? How this 16,000 is calculating, I will tell you. See, for example, first thing I have sold some service to vendor, one guy A. So debtors 6,000 I sold it. So this is a sale entry 6,000, correct? Or else I will show you. So first entry is sale entry, you think. Debtor 6,000, sale 6,000. When I receive a cash 6,000, debtor 6,000. So opening balance, you think 16,000. For example, this is debtors, sale 16,000, sale is 16. Now this guy, this debtor, whoever I sold it, right, he is paying me 6,000 rupees. So 6,000 cash is coming and this debtor is getting reduced by 6,000. So your balance is only 10,000. So this debtor 16,000 opening balance, he had paid me 6,000. So his balance in my account is 10,000. So decrease in. So when there is a decrease in the debtors, I mean to say when someone is paying me, I am whatever the service I have given to them, when they are paying me back, so the cash is coming in, so your debtors will decrease and your cash will increase. So that is a 6,000 here. Got it, right? So outstanding expenses. So outstanding expenses also. So increase in. So this example I will give in later part, okay? This is because we have to calculate based on general ledgers and all, so you will understand better. So debtors is 16,000 opening balance reduced into 10,000, so their cash is coming in, so you have 6,000 inflow. Same way creditors is opening balance is 10,000, so it is increased by 15,000, so your cash is coming in. Suppose this creditors is there, no, for example, suppose this creditor came down to 5,000. So in that case, what will happen? 10,000, you have paid 5,000 to him. So only the balance is it showing as 5,000. So this balance 5,000 you are paying means your cash would have been decreased. So this will be negative balance. But here your creditor, here your creditors are increased, so your cash also increased. So 5,000 plus 6,000, how much? 11,000. So how much now you are calculated net profit from operations is 3,66,000, right? So plus current asset, cash adjustment, cash flows. So put together you have 11,000. You can show separately. You can show here creditors. I have 5,000. Debtors. I'll show 11,000. Sorry, 6,000. Put together I have 11,000. So my total balance from net profit from operation is 3,66,000, right? Plus this 11,000. So 3,77,000 is my net profit from operation. So 3,70,000 is net profit, sorry, cash from my operation. So this is net profit from operation. After adjusting that net profit, you have to consider your current assets, inflows and outflows. Based on that, if you have an negativity, you have to reduce the value. If you have an increase, you have to add it up. So based on this calculation, my cash from operation is 3,77,000. So cash from operation is 3,77,000. Understood, right? So this is simple. First thing, cash from operation. Before calculating cash from operation, you have to calculate net profit from operation by adjusting all your non-cash items, non-operation items. Based on, after that, you have to calculate the cash flows based on your current assets. You have to consider only the current assets over here. It would have given in your examinations questions also. It would have given what are the current assets data, or you have to analyze based on your balance sheet. You have to analyze which and all is your current assets and current liability. Based on that inflows on outflow, you have to calculate your current assets inflow and outflow, and then that value you have to add to your net profit from your operation. So you will after calculating that, you will get a cash from operation. So cash